Mr. Meuser, also the chair of the Subcommittee on Oversight and Investigations, is recognized for 5 minutes.
Well, I think I, for one time, agree with my colleague's final comment about data, so that makes it an interesting day already. So we're all here, we have a sort of a saying here that the chairman started, make community banks great again. We know the data where there's about 1,200 to 1,300 less community banks today than 10 years ago. A large portion of that was through consolidation, whether that's a good thing or not, that's what happened. So we've been at 250,000 in FDIC insurance since, 2010, with no inflation increases or anything. And, you can't help but think, but loss of some of those community banks and all, there's less access to capital, more small businesses have difficulty gaining that access to capital. However, we here are talking about raising the 250 or not, or coming up with other solutions, but we want to avoid all of the unintended consequences, which is why I agree with my colleague about that, and why our chair, French Hill, wants to gain more data and full understanding so we avoid that. So all that being said, Mr. Ryan, do you believe the $10 million in deposit insurance coverage would help regional banks?
I believe it helps all community, mid-size, and regional banks.
Okay, all right, it helps. Consequences? Unintended?
I think you have to ask, is there a moral hazard here, which we do not believe. When you're talking about protecting America's small business, there is no moral hazard.
Okay, maybe. But that's what we're trying to figure out here, right? So do you think, Ms. Castilla, do you think that, how would they absorb the potential, the larger banks, the higher premiums associated with expanded coverage? I mean, Mr. Norquist suggested that higher costs, less lending. What's your thoughts on that?
Yeah, I'm not sure how it'll affect the large institutions, if they'll be able to absorb this fairly easy. But I also doubt that there'll be very much migration and liquidity from the larger institutions just because we increased to the 10 million.
Okay, so how would it affect your bank?
In my bank, we would ultimately start paying higher assessment fees. If there was a failure, I would have more exposure to special assessments. It would, I think, unlevel the playing field even further for regional banks to have more liquidity sources potentially to deploy to make it where it's, it just continues to be uneven with small community banks.
You believe in the reciprocal deposits? That works out pretty well for you?
I've been using it for 20 years. I've never had an issue. We've gone through the financial crisis. We went through the SVB fiasco and never had any kind of volatility there. My customers, and contrary to Mr. Ryan, are very astute when it comes to utilizing reciprocal networks. We have this integrated into their online banking systems. They are able to select which banks they want to exclude. They're able to do due diligence on these banks as if they were driving from lobby to lobby, opening $250,000 accounts. We find it as a strength and a way to really continue to enhance our relationship with the customer.
It does seem like a tactic to deal with the 250,000 FDIC.
Yes,
right?
so consortiums of banks easily could get together too, and they have to do the same thing. But it basically is a technology solution that makes it where the customer doesn't have to drive to bank,
right.
where we now have a technology platform where they're able to distribute their
deposits.
deposits.
Go ahead, Mr. Ryan, you want to say something?
Yes,
Quickly,
if you're a small business owner and you were used to receiving one bank statement and now you have to receive 30 bank statements as a result of using reciprocal networks, that's more complex. I would also add these conversations work during normal periods of time, but in times of crisis, it's really hard to explain how reciprocal networks work.
I'll just say that we do consolidate our statements to one statement for our customers.
Okay. I can understand both your positions. Mr. Furlow, will the banks, what's your position real quick, and I want to get to Mr. Norquist, on the reciprocal, because you view a lot of banks, and were your community banks in jeopardy during the SVB crisis?
During the SVB crisis, we've got a lot of community banks where they have large depositors. We have a huge oil and gas industry, for example, in the state of Texas, and you have large depositors in community banks, and their lending capability is impacted when you see an outflow. So again, our proposal on ETAG to make sure we have a backstop on the front end to stop those outflows right from the get-go is terribly important.
Thank you. Mr. Norquist, what's the solution here?
Well, not to go deeper, I mean, when we went up to 100,000, things didn't get better, they got worse. And in the past, we should open the door more to private sector insurance. This works in many, many industries. You know, we deal with everything from floods to hurricanes with insurance. Banks can make the same
We'll have
decisions.
to talk offline. Apologies, my time is over. I yield back, Mr. Chairman.
Gentlemen,